On today's episode, recapping some June WASDE numbers, looking at the state of wheat, and then breaking down some oilseed reports and discussions around there. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing well, Will. How are you today?
I can't complain. We're having lovely weather here in kind of East Central Texas, although we got rain in the forecast for the next 3 or 4 days or so, which is a little abnormal for here, especially this time of year.
Yeah, we've had some absolutely beautiful afternoons, evenings here in Missouri. Humidity has returned during the day, but it's been breaking in the evening, so that's been a welcome sign.
There you go. So we'll see what the weather might detail for the Midwest, and we might touch on that in just a little while here. But I want to give a quick rundown on the week of price shifts. We did see quite a few slight drops throughout the market. So looking at July 2024, corn down 8 cents at 443. December 24 corn down 5 cents at 463. July 24 soybeans down 31 cents at 1157. November 24 soybeans down 28 cents at 1130. And then looking at soybean oil on a cents per pound basis for July, up 1.11 cents at 43.73. Soybean meal by the short ton for July down $7.70 at 360.30. That 2024 July wheat crop down 16 cents at 591. The 2025 July wheat crop down 31 cents at 656. And then that West Texas Intermediate crude oil contract up $2.61 per barrel at $80.52. So, Ben, really the only positive movement that we really saw in the market was on that soybean oil front. Some moderate losses into the wheat and soybean complexes there. So, but what's your overall takeaway looking at the last week of movement?
Well, we probably would have even had a negative week on soybean oil had it not been for the supportive soybean crush, the NOPA report that we got on Monday of this week. That really helped pull that soybean oil market higher. It helped remove a little bit, it helped lessen the deficit that we had building on the week and soybean, even though we still finished 30 cents down for soybeans. That soybean report helped kind of save a little bit of what we lost. So that was partially there. I think broadly across the board, a lot of the bullish weather rallies and supply shortages we had seen around the world, name the story, name the country. We've kind of worked those off, and now we're working down from those weather premiums.
Well, Ben, you mentioned that NOPA report, and it came in within expectations, but still above the average pace that we've been seeing. We've been seeing some record crush numbers here as of late, but really, it's kind of a challenge because we've seen some record crush numbers, but the other support factors, looking at the soybean complex, looking at things like trade, just haven't been up to par. So kind of where do we sit within how these record soy crush numbers are really impacting the market? How much can they really kind of uphold the soybean complex?
Yeah, so we had a really disappointing April. So our April crush number of 169.5 million bushels. Again, that was revised later on after there was a realization of some errors in reporting for the state of Indiana's crush numbers. But so that was revised a little higher, but that was significantly lower. If you remember back to April, that was well below all the expectations. It was well below where we had seen volumes to date for this calendar year. So I think the general expectation was that some of those soybeans would move from April to May, and we'd see a little bit of rally here in May. And we did. We set a new record volume for the month of May, but this is still below where we had been trading earlier this calendar year. And I think we could have a little bit of a maybe softer summer, still supportive, still at strong levels, but not what we saw earlier this calendar year as we move our way through the summer months here. So. Again, we're using soybeans, just not as many as what we thought. That trend kind of continues on the soybean side.
Looking at one of the reports that we came out with last week, or not we came out with, USDA came out with last week, looking at that June WASDE report, there were some revisions in the international market, not too much domestically. But Ben, looking at the shifts there, looking at some of the cuts in the breadbasket of the world, looking at maybe wheat production there, how much of an impact do you see the June WASDE report really moving the market? It looks like it kind of absorbed it a little prematurely.
Well, as you would expect, the June report was not overly exciting. There was very few changes, as has been common in June. USDA tends to be a little bit, I don't know what the word is. Like June is just not a month where they're traditionally making changes ahead of the acreage report at the end of the month for U.S. commodities. Several other countries in the southern hemisphere have a tendency to be through harvest at this point, or getting closer to harvest. So we have a tendency to know more about the crops, at least in the southern hemisphere. So the attention was really in the northern hemisphere, and we did see, USDA reduce Russian wheat supplies 5 million metric tons. We saw another 1.5 million metric ton revision in Ukraine. So 6.5 million metric tons combined between the two. As a reminder, we assume that Turkey, with their export ban, is going to kind of offset some of those supply reductions or those cuts in supply there. So in all, it was kind of the market took it pretty much in stride, even with some disappointments in South America's soybean and corn estimate numbers. And I say disappointment, not from the standpoint that they were so bad that we were sad, but that I think the market, especially in the case of Brazil, was expecting at least 2 million more metric tons of corn reduction and at least another 2 million metric tons or 1.5 million metric tons of soybean reductions for South America.
Well, and just seeing how the market's kind of moved around some of these reports, it hasn't really budged too much, for a lot of this stuff. So it kind of seems like the market's sitting and waiting for something that could be more impactful directly when it comes to the U.S. So that could come in the form of some dryness and maybe looking at the forecast for the Eastern Cornbelt, especially, Ben, there's a lot of dryness coming up in that forecast and that 7 to 10 day forecast. So at this point, still kind of early in the growing season, how do you expect that to maybe impact yield potential and then impact the market's expectation?
Yeah, so I'm not an agronomist. I do actually have some education in agronomy. My minor in college was in agronomy and plant science, and so it's always convenient when I can pull that out and make a point I want to make. Oh, I had some plant science education. This is me setting up my way of saying I'm not actually 100% sure what this dry weather does to crop yield potential. I am kind of under the belief that if we have a little bit of a dry spell here, which don't get me wrong, it is dry and the dryness is kind of growing in the Eastern Cornbelt in certain parts of Indiana and certain parts of Ohio. And but I'm kind of of the opinion that if that dryness allows those roots to set and they face a little bit of, I'm not going to call it drought stress, but let's just say they face a little bit of stress here to where they can set the roots, and then we get rain in July and August. To me, that seems like that could set up a potential for a very strong crop. Now, that's based on a couple of ifs, right? There's a couple of ifs in there, but I don't know if the dryness right now that helps allow these crops to kind of set their roots really creates all that big of a deal. I would be more concerned if we got wet weather right now and the roots weren't allowed to set and then it turned dry in July, right? So the exact flip of kind of what I think is starting to set up here. Of course, this dryness could continue and it could go all the way into July, and that would be a bad deal, right? If it turned dry and stayed dry, that would be a bad deal, really hamper yields. But I guess that's my long-winded way of saying I don't know if necessarily right now the dryness is going to limit yields all that much.
So too soon to tell on that front, for sure. There's a lot of time in the growing season, a lot of water to go underneath that bridge. So Ben talked about a crop that did set some roots, and it is looking pretty positive across the country. Looking at that winter wheat crop, I know you have firsthand experience right now back home working through that wheat harvest. What's the wheat picture looking from here moving forward as we're working through harvest on the wheat with some very positive numbers coming out of that?
Yeah, so you did mention that we are home, or I'm home. I always spend at least a little bit of time in June at home. This is where I spend my summer vacation, I guess. Appleton City is my summer vacation spot. I'm working from the coffee shop in downtown beautiful Appleton City, Fika Coffee. And luckily they have Wi-Fi that supports telecommunication here. So Yeah, so I am home, and the wheat has been great. I think it is another year where the wheat yields are surprising people. Um, we thought they looked pretty good, but I think they're coming off even a little bit better than what most people had anticipated. We've certainly seen the wheat market retract anywhere between $1.80 and $2 over the last, let's just say month and a half. We've pretty much given back all that weather premium we built up during May. Again, remember we had some pretty good bullish international wheat stories, and they've all kind of dissipated. We still have some deterioration, as we talked about on the onset, in that Black Sea region, between Ukraine and Russia. The question now becomes, if we start to get below 80 million metric tons there, that's kind of that threshold. We're sitting at 84. If we get below 80 million metric tons, that's when I think we could really start to see the market turn again and start trading wheat shortages, especially in the Black Sea region. But I don't see it right now. No. The hard part is I'm not really sure we see much of a wheat rally between now and, let's just say, August. And so, if producers are sitting out there with wheat and they're thinking about what do we do with it, can we, that you're probably looking at 10, 15 cent storage costs to keep it to August, maybe for a little bit of a rally. And it's not setting up a picture to where I think we're going to see a huge rally in the wheat market like what we saw. I think we had our big rally last month.
Well, and just to really get kind of a snapshot of where the market believes wheat kind of sits in its positioning right now, with some very positive yields and some positive ratings coming out of the U.S. versus what the trade front might look like. We got a 65-cent gap between the July 2024 crop and the July 2025 crop. And I think that just kind of hints at where the market is expecting the split from this year to next year, maybe July. So more to see on that as we move forward, obviously, and that's always subject to change, as everything's subject to change. Ben, what should we really be paying attention to? What should farmers and ranchers be watching for in the next week? We do have a day off of trade. Was that tomorrow? So on Wednesday this week. But otherwise, what should we be watching for?
But it's pretty slow week. There's not a lot. Just as you mentioned, some things are delayed a day because of the holiday on Wednesday. So we get the Commodity Futures Trading Commission data on Monday of next week. That's probably the report that I'm maybe the most interested to in the next couple. Well, two actually. One relates to us. One relates to our sister program, the Weekly Livestock Market Program. But for us, I think that Commodity Futures Trading Commission report. Do we continue to see money managers continue to build net shorts, expecting kind of this deflationary commodity picture that we've experienced here as of late? If that's the case, right, then they're signaling that it's going to take even a little bit more of a bullish spark to kind of pull markets a little bit higher. So, yeah. And then the cattle on feed on Friday, that's the other one that I'm interested in, just to continue to see, any indication that we're starting to see some rebuilding in this cattle herd.
Well, Ben, it's always good to have your knowledge and information on the program. Viewers and listeners, if you want to learn more about us and what we do, or that cattle on feed report, you can check out our sister program, the Weekly Livestock Market Update, at brownfieldagnews.com. Ben, thanks again. Have fun through wheat harvest. I'm Will Robinson on Brownfield.